Welcome back to the portfolio, everyone. And in this video, we're going over 5 home builder stocks to keep your eye on right now. With the pandemic and people being forced to stay at home, and the idea that remote work is going to be here to stay, individuals are now fleeing packed cities and moving to the suburbs. With remote work being a now prominent place in every industry, individuals can now afford to no longer live in a tightly packed city where all main businesses and actual business activities are conducted. You can really live anywhere across the country and still get your work done throughout the internet. So home builder stocks have seen a rapid surge as of late, and charts actually indicate that these stocks may go even higher. So in this video today, we're going to go over 5 different home builder stocks to keep an eye on right now. Each of these companies actually performs different activities, but they all produce, manufacture, and build homes across the country. Some of these companies provide more luxury homes, others build more real estate in the condo and apartment space. But overall, we have 5 different home builders who may see a nice surge and see a continuing growth over the next few years with low interest rates and the idea that remote work isn't going anywhere anytime soon. Individuals are looking to have more space for that home office, or overall, because we're spending more time in your tightly packed home, small, very tight apartments aren't really doing what they need to do anymore. So we're going to go over 5 different home builders you can keep your eye on right now. As you know, everyone, I am the Gen Z investor, and every single day we talk about the stock market. We go over different stocks you can buy, overall stock market performance, and any other big stock market news and headlines. So please hit that like button and subscribe. The first home builder stock we're going to take a look at today is ticker symbol LEN, Lennar Corporation. Currently trading at $83 a share. For each of these companies and all 5 home builders we're going to examine today, we're going to take a quick comparison, take a look at their current share price, their current forward PE ratio, their growth in income over the past 5 years, and some future growth estimates from Yahoo Finance. We're going to start off with Lennar. From 6-month chart, they are up 150%. Over the past year, shares are up only 45% because this company was hammered during the March decline. Before the pandemic, shares are being traded at around $71, and they saw a massive decline, hitting a 52-week low at around $25 a share. But since that point, have been on fire and have continued to surge, reaching new highs. This company is currently being traded at a $25 billion market cap and a forward PE of 11.45. At this $83 price point, they are considered undervalued from Simply Wall Street, which puts an estimated fair value for this company at around $91 to $92 a share, which shows that this current price point is in the range of being traded at an 8 to 9% discount right now. Lennar's income statement has also seen some nice growth. Total revenue 5 years ago at year-end 2015 showed $9.4 billion of total revenue compared to the past 12 months, which they brought in $22.6 billion. So a beautiful, consistent upward trend in revenue from Lennar, and they are currently paying out a very small dividend at 1.19%, but that is only taking up around 13% of their earnings. So this company has a lot of room to continue paying out that dividend, and they maintain a lot of money back into the business in order to grow operations to hopefully continue to grow revenue and earnings in future years down the road. Yahoo Finance expects this company to grow at a rate of over 11% per year over the next 5 years, which is a great expectation to see, which just shows that this company is expected to outperform the overall stock market. We're going to take a look at the second home builder, which is DHI, D.R. Horton, coming in at $75 a share right now. They are up 51.5% over the past 12 months and currently are trading with a market cap of $28.3 billion. They have a forward PE of 13.46, and this company, similar to Lennar, has seen some beautiful total revenue growth. Year-end 2015, $10.8 billion of total revenue, all the way up to close to $19 billion in the trailing 12 months, and on the chart, consistent year-over-year growth in top-line total revenue. This home builder does pay out a dividend as well, just shy of 1% at 0.9% current yield. Once again, extremely low payout ratio, making up only 12% of their earnings. and they have a nice 5-year dividend growth rate of over 25% averaged over the past 5 years. And analysts expect this company to post great results and actually grow at a rate of over 18% per year over the next 5 years, which is incredible to see. So the first two home builders are expected to see some nice continuous growth over the next 5 years as well. The third home builder stock to keep your eye on right now is ticker symbol PHM. Pult Group is currently being traded at $47 a share. They are up 31% over the past 12 months and currently have a market cap of $12.75 billion. Currently being traded with a forward PE of 10.89, and another company that has seen some nice total revenue growth over the past 5 years as well. So for starting off, over these first three companies, you can see a nice overall trend of, in the home builder space, total revenues have consistently grown year over year. Take a look at total revenue chart. Nice consistent growth where year over year the company is beating their previous year revenue numbers and they are continuing to grow. They do pay out a small dividend as well, coming in at just slightly over a 1% current yield. Another company paying out only 11% of their earnings, and their 5-year dividend growth rate comes in at 14.37% averaged over the past 5 years. But overall, with these companies, you're not jumping in for the dividend. These are a growth play, and you're just collecting that very small dividend as an extra little bonus. Expectations for future growth. This is actually lacking the first two companies on this list. Analysts are only expecting a 2% annual growth rate from this company over the next 5 years, which is underwhelming to say the least. The fourth home builder to watch right now is ticker symbol TOL. Toll Brothers, currently at $49 a share. This company is up 25% over the past 1 year, and they have a small market cap around $6.28 billion. If we jump over to their income statement, this company has seen consistent growth year over year as well. Each and every year they're beating previous year total revenue and are posting new highs every single year, which is still great to see. They are paying out a 0.88% dividend, which is extremely low once again, but that only represents around 14% of their total earnings. Analysts, though, are not very optimistic about this company. They're actually expecting a decline and actually a reduction, no growth from this company, an actual decline over the next 5 years at a rate of just under 2% per year. That is something that kind of should scare people away. These analysts who, of course, try to predict market performance, use all these different algorithms and different ways of analyzing companies, actually believe that this stock is actually going to decline over the next 5 years. Will be interesting to see if that actually happens. Of course, analyst expectations can only be taken with a grain of salt. No one can truthfully and accurately predict the future growth of an individual market or an individual company itself. So these are just expectations. No one knows for sure, and this company may outperform the others, but I always like to just show what the professionals and what the analysts are currently stating for this company. And the fifth and final home builder we're going to go over today is ticker symbol MTH. Meritage Homes Corporation at $113 a share. Share price is up over 64% over the past year, and the smallest company on the list today with a $4.32 billion market cap. Forward PE coming in just above 12. Another company following the similar trend of growing total revenue year over year, which is great to see. This industry as a whole has a lot of similarities. All of these companies have posted great revenue growth year over year. Every single company has upward trend in total revenue, and a lot of them are paying a very low dividend yield that is only represented by a small amount of their earnings, and they have very low payout ratios. To wrap up this comparison, MTH is another company that is actually expected to decline. The next 5 years, the average growth expectation for this company is a reduction of 1.8%. So those were 5 home builder stocks to keep your eye on right now. The home builder sector has been very interesting. Individuals are making that transition away from, packed city apartment buildings and condos and are now trying to get some more space out in these suburbs. And these home builder stocks are working very hard to try to increase that supply. Right now, with the recent surge in home buys, there's not a lot of supply on the market for these people to actually purchase. So these home builders are continuing to grow at a fast rate and building as much as they can. Especially with the low interest rates right now, mortgages are cheaper to get, and it'll be very interesting to see how this sector performs moving forward. Let me know down in the comments which home builder you believe will succeed over the long term and which one may be a great buy at their current level. Thanks for watching, and I will see you in tomorrow's video.